Yesterday was a day where, it's low probability conditions, and you
Okay.
know, you have to really trade. The biggest thing when you trade is you have to make sure you take out some level of and trade into a key spot, and that has to be a pivot higher low or a higher time frame internal fair value gap. Okay, the other ones that we use are session liquidity, like London lows, London highs, and Asia lows. And as the point of yesterday, we had moves right off, Asia, London highs and Asia lows. Okay, and when we look for those, we're looking for our model to present itself. Okay, because the model is going to let us know whether we're going to trade or not. Now,
Hmm.
this one I described yesterday, there was no inverse fair value gap made because of liquidity, but we did have an order block move up here and inverse above. Okay. The one on the way down, okay, was a 5 minute inverse fair value gap where we took out London highs and we had a manipulation lower, to the downside. Yesterday was very choppy conditions. And then later on in the day, okay, we take out liquidity, right? We take
Hmm.
out liquidity. Okay. We are delivering from a 1 hour fair value gap, right? 1 hour fair value gap delivering from. We took out the high inside that 1 hour fair value gap, and then we had a inverse fair value gap off of that to the downside with SMT. So only take trades when we are delivering from a higher time frame fair value gap or an external liquidity point, and look for our model at those points. Don't get caught up in between. That's why I don't love this trade right here, because
Mm.
we didn't take out any liquidity. We did on the ES, but it was very choppy. So that's why I decided not to get involved. But this is a better trade because we're delivering from a higher time frame fair value gap. We have SMT, we have a manipulation of internal liquidity, and we have an immediate down move at an inverse of that displacement, showing that this was manipulation. Okay. Now, later on in the day, okay, when things started to move lower and we took off of that, now we're delivering from a 1 hour fair value gap. And what did we do? On a 15 minute, we displaced, right? We displaced. So now, if we're going to continue lower, we want to look at this fair value gap right here to continue lower from.
Okay.
So whenever we tap into a 15 minute, what are we looking for now, Swappy? What are we looking for? If we want to tap into a 15 minute fair value gap and look for a continuation lower, and this goes back to what we were just talking about. On a trade like this, I know if this is defended and I get short here, I know where my target is. It's
Yeah.
external liquidity because that's inherent. So I can
Right.
frame a trade from entry to target. Okay. Now, what needs to happen inside here? What's our motto? We need to deliver from a higher time frame fair value gap. Well, we're already delivering from the hour. We already inversed it and are on the way down. Now, on the way down, we created a 15-minute fair value gap displacement, a bearish one. So when price comes back into it, we want to see how it reacts. Okay. And if you notice, we get a SMT right at the 15-minute fair value gap, exactly what we want to see. So let's go
Right.
down to the 1 minute chart. Okay, we are now on the 1 minute chart, and what are we looking for? We're looking for an inverse fair value gap out of this higher time frame fair value gap to confirm the SMT, which we get right here, right? Your
Yep.
entry is going to be right here on the close. Good momentum. Our target is going to be, we'll put the target in after. The stop's going to be right above that fair value gap. And just to go to the 15 minute, our target is going to be that external liquidity level that we talked about, internal to external. Okay. And that is over a 7-to-1 risk to reward trade.
Hey everyone, it's Dale here. I hope you enjoyed the video. If you like to trade alongside me and our team of prop firm funded traders every day, then click the link below the video and hop aboard. We are looking forward to trading with you.